Hello, my name is Steve Bigelow with the Candlestick Forum. The downtrend is still in progress. As we can see this past week, when the Dow bounced up off the 50, it didn't have confirmation. They couldn't close it above the T line. Stochastics still heading down. Even though it looks like it's still trying to support at the 50, it'll be important to see how they open this on Tuesday. Either we're in a bearish J-hook pattern. If they start trading positive, we're still in a sideways mode. More indicative was over here on the NASDAQ. This is a very kind of close evaluation of what happens when you're still trading below the T line. Note that the bounce off the 200 was not a real candlestick signal. It's called a meeting line, but they had to have one final confirmation. They needed to close above the T line. On Wednesday, you could see that after they opened positive, they closed back below the T line. Now that's kind of cutting hairs, but the fact that they couldn't close above the T line still remains a strong statistical probability that the uptrend is not in progress yet. That was illustrated Thursday's trading. We saw some bounce again off the 200 in the NASDAQ on Friday, but the stochastics heading down, we're still below the T line. A lower open would still produce a strong prospect of a bearish J-hook pattern, telling us we're heading down further. Positive trading would still tell us until they get up above the T line, we're not in a bullish mode, still kind of a choppy mode. So the sectors that are working well, the home improvement sectors, we're still short. The apparel sector, you can be short, but the oils are still trading positive. So things like floor and decor, look at your bearish J-hook pattern. Not only do you have a failure right at the 50 with a close below the T line, now you have a bearish J-hook pattern. They couldn't get up above the T line, but note how they started wave three of the, started wave three with a gap down through this support level. This allows for shorting this with the expectation that wave one and wave three are going to be about the same. You can see the other home improvements, Home Depot, after it failed up here with a bearish engulfing, failed at the T line with a bearish left-right combo, gapping down through this level, also implying wave one, wave two, wave three to the downside, which in this case could get you down to the 200-day moving average. Lulu, one of the apparel stocks, you can see how every time they come up to the T line, they sell it off. There's again your bearish left-right combo. If they open this lower, giving you a bearish doji sandwich, indicating they're not supporting at this level, look for wave one, wave two, wave three in progress. So there's more downside movement to this market and sectors that are acting good to the bearish side to have short trades or puts. The oil sector is still acting well, though. Crude oil is up to $84 a barrel. You can see the Morningstar type signal on RES, making this a bullish J-hook pattern. Wave one, wave two off this Morningstar signal going into wave three. So the other sectors that were acting well last week are still acting well. The metals just don't want to seem to sell off. So there's still some very good buys as well as plenty of shorts. And that's where you use your high probability candlestick patterns. MRCY is doing a bobble breakout. Bobble breakout is a more defined J-hook pattern that can be easily identified when it hit the first resistance level, pulled back to the T line, and now coming back up, doing a J-hook pattern through the resistance level, which is a good as far as a candlestick analysis for a good chart move. But the enhancement is that people that aren't using candlestick analysis but are watching to see what happens at resistance levels are now buying because they can see that it went through the 200-day moving average resistance level. Again, everything we look at is just analyzing the nature of investor sentiment and using other indicators that everybody else is watching to enhance our evaluation of a positive trade. But right now, with the market still trading off, oops, this is an old chart. It hit the 200 as expected. Now we wait to see whether on Tuesday they take it down through the 200. That'll be it. We'll see you in the chat rooms.